Many thanks for joining us. This is Business Incorporated on Channels Television. I am Bisi Adebayo. On today's show, Saudi Arabia to make deepest cut to crude supply despite strong demand. And KPMG LLP's South African unit appoints 9 new executives in an attempt to restore trust in the auditing firm. Plus, Mauritius Bank makes an offer to acquire Chase Bank of Kenya. Well, let's begin the show from the stock markets in Africa, where the market is flat at intraday in Nigeria, with the index up 0.01%. The DSC index is up 0.1%. Egypt's market is down 0.86%, while Kenya ended 0.2% up on Monday. And Gulf stock markets are mixed at intraday on Tuesday, with the Abu Dhabi index up 0.48%. In Dubai, builder Drake & Skoll, the most heavily traded stock in recent days, fell 2.1% after 4 straight days of strong gains. The stock had been surging since last Wednesday after the firm completed a capital restructuring. Dubai's main index lost 0.6% as GFH Financial dropped 1.2%. Qatar's index is up 0.49% at intraday. Saudi Arabia's index is down 0.33%. And in Wall Street, the stock futures point to a slightly higher open for stocks today, but a return to a record run for stocks looks unlikely as investors focus on the kickoff of the third quarter earnings season later this week. But what did the stock benchmarks do? The Dow Jones Industrial Average Futures rose 0.16% to 22,748. S&P 500 futures added 0.1% to 2,547.5. while Nasdaq 100 futures gained 0.19% to 6,076.25. And South Korean equities led broad gains across the Asia-Pacific region on Tuesday as investors there caught up with the global market strength following a long holiday. South Korea's benchmark Kospi was up 2% in early trade and approaching the index record high after local markets were shut for all of the last week and Monday. In Japan, the Nikkei stock average gained 0.3% to 20,771.41 following Monday's market holiday led by automakers. The index is closing in on a 21-year high. Elsewhere in the region, Australia's S&P ASX 200 was flat. Hong Kong's Hang Seng Index also traded flat after pulling back from a 10-year high on Monday, while the Shanghai Benchmark Index was off 0.3%. And Saudi Aramco plans to cut 560,000 barrels a day in its allocations to customers next month. The Saudi Energy Ministry says Aramco plans to supply 7.15 million barrels a day, despite very strong demand that exceeds 7.7 million barrels a day. Saudi Arabia, the world's top crude exporter, is leading the Organization of Petroleum Exporting Countries and other producers, including Russia, in powering output under a deal that helped propel oil into a bull market in September. Lower compliance with the curbs promised by some nations, combined with rising production in OPEC members Libya and Nigeria, both exempt from reducing output due to their internal strife, have added pressure on Saudi Arabia to make deeper cuts of its own. In the meantime, Angola's state oil company Sonangol is aiming to slash break-even costs on new oil production to as low as $20 to $30 per barrel and make its contracts more attractive to investors and oil and gas companies. On the sidelines of the Financial Times Africa Summit in London, the company's chief, Isabel dos Santos, told journalists that changes to the Sonangol board announced last week would help the company revamp new exploration and production agreements and significantly cut costs. The billionaire daughter of Angola's president, Jose Eduardo dos Santos, says the changes were essential so that new concession agreements could begin delivering dollars per barrel rather than just cost. On Friday, Sonangol said it had saved $1.7 billion, and that's thanks to spending cuts since 2014. And staying with the oil market, oil prices rose to around $56 a barrel in early trade today, supported by Saudi Arabian export cuts in November and comments from OPEC and trading companies that the market is rebalancing after years of oversupply. Brent crude was up 32 cents at $56.11 a barrel, while U.S. crude gained 29 cents to $49 87 cents a barrel. A research analyst at the financial derivatives company, Dema, joins me now to talk more about the crude oil market today. Many thanks for your time, Adem. Saudi Arabia agreed to quote crude allocations for November OPEC, and OPEC has called on U.S. shale oil producers to help support plans to curb global oil supply. Of course, that comes with a warning that unprecedented measures may be necessary next year to rebalance the oil market. But do you think that this will ensure stability in the market?
Yes, of course, most definitely it will, considering that shale production is a major threat to the OPEC production agreement. For instance, the rally we saw in September was cut short once signs of re-emergent shale production once signs of higher shale production started to re-emerge. I think if any form of collaboration can take place between OPEC and shale producers, it will be very supportive of the market, and this era of depressed oil prices might finally come to an end. However, I think it will be very difficult for any collaboration to take place because these two players are direct competitors. They are both competing for market share, so I think it will be very unlikely if any collaboration takes place.